Progress.
Right. Then we have to prepare the cash flow statement. Yes. For how long? 6 months. Right. The others are theory questions. Don't worry about them right now. All right. So how do you start, guys? Additional information. Don't start from the income statement. Who told you that? Did I tell you? Have I ever told you that?
Normally we would start from income statement.
Yeah, that's the thing. Normally, normally you are wrong if you are doing that.
No.
Okay.
After that, I do. That's
Yeah.
weird. Because literally.
Yeah. Listen. Yeah, you have to start with additional information. Huh?
I did that.
You didn't know that?
No, I did that.
Okay, good. So you have to start with additional information, right? So that some people had recorded sales in the cash flow statement 240,000. And sales is not 240,000, yes?
Sir,
Yeah.
because the way we're taught is that
Yeah, that's wrong. Okay, now listen. Now we'll do that. Okay, guys, you have to start with additional information, okay? Always. Right. 60% of sales are on credit, meaning 40% is cash. So 40% of what? Yes, 240,000. 96,000 is what?
40%.
Cash sales, right? Then go and report in the in the cash flow statement for cash sales 96,000. Then after that, having done that one, what do? Don't forget there's GST, right? GST received. How much? 10% of that, 96,000. Okay. Right. Yeah, I will rub this one as well if you want. You don't need this one. Yeah, don't worry about that. I'm going to show you how to do it. Okay. Right. Now, what are we doing, guys, at this point? We are doing part A and B. I'm going to calculate the GST paid and the cash flow statement. Last two are theory questions. Don't worry about them now. Okay. Right. Now, first bullet point is done. Right. Second one. Right. So far, what you are doing is only the sales and GST. Right. Done. So of the credit sales, 90% are expected to pay in the current reporting period and will receive a discount. There were no outstanding amounts owed by accounts receivable from previous reporting period. Why do they say about the previous reporting period? Is that useful? Previous reporting period, yes. The second line, you're not listening?
Yes.
Yes. Is it important? Why?
Because that means that in this month, we don't have any cash receivable other than.
Yes, correct. So that means we didn't have something in the previous reporting period, means so technically how much should we have received? What percentage should we have received from that from the previous sales? 10%, yes, plus GST. So that means whatever the accounts receivable we had at the beginning of this period, we would have received in this period. Yeah, so then they are saying there was none. Okay, so then we are receiving 90%. So then they said credit sales is 60%, right? So total sales is 240. So 60% of that, how much? 144,000. Okay. So then from that, what happens, guys? 90%, yes. Right? 90%, which is 129,600. Okay. 129,600. Yep. So from that, so 90%, meaning they are paying this one is 129,600, 90%, yes. Is this the cash receipt, guys? Sorry, is this the receipt from accounts receivable? No.
GST as well.
GST. Don't forget GST. Add GST for this. Okay. So that means how much? 129.60. 142,560.
Which one's on the desk?
Yeah. Dom, can you please focus on this?
Yes, but I want to make some complaints.
Yeah, can you stop it?
Yeah.
This is serious.
Okay.
You are playing with the desk.
But this is vandalism. It's actually a criminal offense.
Yeah, forget about it.
It's a criminal offense.
Then complain to the police.
I will.
Yeah.
Okay. I will. I'll
Now listen to this.
Yeah, I'll listen to this and complain to the police later.
Hmm.
Okay. If it's disturbing me, I'll complain to them.
Yeah, you are disturbing me. I'm not talking.
Sorry.
Okay, 142,560 is what? Is the cash receipts from accounts receivable. Yes, agree? Wrong. A discount? See? So discount they haven't said. Yeah, but then we can find the discount where? Our income statement. Discount. 1100. Okay, 1100. Then subtract 1100, guys. Sorry, don't give anything. Right. Yeah, now the next one, the one I'm giving you today, is harder than this. Yes.
You should start making company papers.
Huh?
You should start making company.
No. Yeah, making company. Yeah. Actually, the ones I have made, I can sell, I think. Yeah. Sorry?
Making a company to scale.
Scared, yes. Yeah, that's the thing. Exactly. That's a good point. Because the people think that accounting is too easy. Yes. It is not too easy. It is easier than some other subjects, but not too easy. Yes. Yep. You can get an A, but getting 50 is, yeah, challenging. Because you want to get 50, yes? Yeah, you can. All right. So then, guys, this is 141,460. What is it? That is the receipts from accounts receivable. That you can go and report in the gain operating inflows. Okay. Right. Next one. Third bullet point. I'm going to rub this one. Done writing? Okay. So third bullet point says GST was paid and received on all relevant items. Okay. We know that. Right. GST refund was received during the reporting period. So there was a GST refund. Yep. Did we come across that? Not yet. Yeah. If you want, we can go and have a look through. Otherwise, we will come across that as we go. Yes. How much is GST clearing anyway? 3,800. Why does it say debit? Yeah. GST asset receivable, yes. So which we are going to receive it. If you want, you can finish it off right now. Otherwise, you can do it. You can do it later as well, right? Yeah. So GST refund, guys, another cash inflow. Operating activities. Okay. Now this question we are doing, guys, I mean, including income statements, they are going to be useful for our next lesson, which is budgeting. Okay. Budgeting will be harder than this. Right. I mean, more information. Okay. Right. Then next point. Yep. Okay. Next one, guys. Fifth one. Business purchased a new delivery truck costing 50,000 plus GST on 1st of April. Right. A deposit of 10,000 was paid, and the remainder was funded by a loan from Kevin Finance. So then, what do we do? Yeah. How much was our truck costing? 55,000, yes, including GST, right? Including GST, 55,000, right? And then business has paid a deposit of 10,000. Then what is the remainder, guys? 45,000. Now remember, you are going to receive the loan, the entire amount. How do we know that? Because they are saying here, remainder. So just don't say 40,000 was your loan. Okay, 40,000, not 40,000, 45,000 is the loan. Why? GST 5,000 as well. GST is also funded by the loan. Okay, why? Because they are saying the remainder. Okay, right. Then we have a lot of information to record here. What are the things we are going to record? One thing is what? Loan received. How much? 45. Where? Financing. Right? Financing, you can go and report financing in here. Right? So what I did was, guys, I started from the bottom because I couldn't figure out the spacing. So then I firstly did these three. So anyway, that's going to be common. All four of them will be common. Then I went back. Okay. So cash flows from financing, receipt of the loan, 45,000. Okay. Right. Then the other thing is, guys, what is it? We are purchasing the truck, which is 50. Where do we report this 50? 50,000? Investing, yes. Investing, we are going to report 50,000, right? Purchase of delivery truck. Okay. Right. Then there is another thing. What is it? No, 10,000, everything it's included in the 50,000. 10,000 and the other 40, everything is included there. GST paid. So then what I would do is 5,000 GST paid. I'll go and record here. 5,000. So I'm not going to do GST separately, JD. Okay? Yeah. Like you, I'm not going to do it separately. As I come across the items, then and there I finish. Why? Because if you are going to do GST separately, means you are reading the question again. So you are wasting your time. Don't waste your time. Okay? Right. Then, otherwise, you know what I did? If they had, let's imagine they had not asked us to do it separately, then I would be doing this way. GST paid. I have shown you this one before, yes. So as I come across, I'll put in the brackets. I'll carry on. Okay. Then guys, next one. Loan repayable 500 per month, which include 50 interest. So 500 per month. How many months then? Cash flow is for 6 months. 500 times 6? No. Then 3 years. Why? Because they got on 1st April. So that means 500 times by 3. 1,500. Right? Sorry? What?
Interest expense.
Interest expense is income statement. Also, it says it includes 50 interest. Right? So that includes 50 interest, meaning 50 times 3, 150, yes. So that means how much is the loan repayment, guys? 450 per month, yes. We times by 3, 1350. Okay? Right. So then where do you report this 1350? Yes, Anna, where do we report 1350? Yeah. Operating outflow? Sorry? Yes, Christian, where do you report 1350? Financing outflow, how much? Yeah, see, you can't say not sure. What do you think? That's what I'm asking. Both.
Financing outflow.
Yeah. So what is it, guys? Yeah. So how much is interest? 150. Where do we report 150? Operating outflow. Remainder? Financing. Why are you saying operating? Loan repayment is? You can't, because you can't go wrong. In financing, what are the items we are reporting? How many? 4. What are those? Loan repayment, drawings, sorry, capital contribution, and loan received. Yeah, loan principal received and repaid, financing, capital and drawings in cash, again, financing. That's it.
Four.
4.
Always.
Always. Always 4. Okay. Right. Then report them, guys. Where is it? Interest paid days 150 done, and then loan repayment 1350. So this is the only place you can use brackets for the payments. So you can use it. Right? Unfortunately, your VCA allows you to use brackets only. Okay, guys. Next one. Right. Owner withdrew 18,000, including 2,000 of inventory. Where do you report financing outflow? How much? 16,000, right? Why not inventory? Non-cash. So then drawings is only 16,000. Yeah. Okay, next one, guys. 170,000 of inventory was purchased during the period. Of this amount, 70,000 is for cash. Yep. So 70,000 is cash. That means 70,000, yes, 10,000 GST, 10% GST, and then you can go straight to a record in the operating inventory purchase 70,000, and I would put the 7,000 in part A.
Oh, see what happens then. So now we see that increases by
Okay. Right. Next one, guys. Now from 170,000, 70,000 is done. What about the other 100,000? Credit purchases, yes. And also, yeah, 100,000. And then the next one they are saying about accounts payable are paid on the month following purchase. 30th June 26, business owed suppliers 48,000. Okay, now this is confusing. Yes. Right. Okay, now first of all, this 100,000 you have to pay with GST, meaning you have to times it by 1.1, otherwise times by 110%, whichever it is, get the GST in there as well. So 110,000. Right? This 110,000 is what is it? Payments to owed to accounts payable, yes? Owed to accounts payable is 110,000. Right. Then accounts payable are paid in the month following purchase. But we don't know about the month because they have given us for the period, entire period, which is how many months? 6 months, right? Then they are saying on 30th June, the business owed suppliers 48,000. Why did they give us 48,000? Because ending balance. So that means 48,000, are we going to pay it? This period? No. Next period. That means, is that 48,000 included in the 110? No. No. Yeah, this 48,000, is that included in the 110? Yes. Yes.
Wait, what do you mean? It's 110 minus 48. So
Yeah, my question.
yeah, it is.
Ah.
It is because the one you paid is 100,000
Makes sense, guys? Right? So during the period, during these 6 months, right, the total amount that we owed for the purchase of inventory to the accounts payable was 110K. Right? Also, they are saying at the end of the period, we owed them 48K.
Of that, yeah. Of that, 48,000 is still being owed.
Yes, my question is that 48 is included in 110? Yes. So that means how much has been paid off from this 48,000? So you subtract 48,000. Yep. So then 62,000. I'll leave it open.
Sorry. Is this all of us?
Open all the way.
Oh. 60,000.
So 62,000. Okay, 62,000 is how much has been paid to accounts payable for whatever we owed in this period itself. Is it clear? We had purchased 110,000 worth of inventory for which we owed, and from that we settled 68,000 in this period itself. Make sense? 48,000 is still owing, which will be settled next period. Make sense? Okay. Yes. Now, do we have a starting balance? Yes. Which is, look at this, 31st December, 60,000. What do you think will have happened to this 60,000? It has been paid when? In this period. Well, that's their policy, yes. Whatever we had owed for the previous period, for the previous month, will be settled in this period. Right? So that like that, what we had owed for previous one will be settled in this period. Okay. Then you are going to add that 60 also. So then total is 122,000. Is that correct? 122,000? Yes. What about discount revenue? No discount revenue here. Okay, 122,000, right? So that's the payment to accounts payable. So go and record in the cash outflow in operating. Payments to accounts payable. Okay, guys.
Sir, I would like to say I'm sorry for having the rocky start. Just that I don't like it because I got in trouble for like drawing on the desk once, so I'm a bit harsh on that. And
Yeah, don't worry here. Okay, guys, payments to accounts payable done. Next one. I'm going to rub this one. Right. GST we are done. Bank balance not done. Bank balance is how much? 25. What is that? What is this one? Balance at the start. Bank balance at the start. Second last one in the cash flow statement to report. 25,000. Okay, guys. Then is that all? Is that all? Yeah, we are done with up to the bank balance. Is that all? No. Then GST received. GST received done. GST received or you mean refund? Yeah, both done. Drawings done. Income statement. Now you can start where you started. The question. Yep. This is where you started the question, yes? And now I'm going to start from there.
Yay.
Okay? Yeah. Right. Now we'll see what happens. Okay, guys. Sales, is it done? Yeah. Everything done. Don't worry. Cost of sales done. We don't report it in the cash flow, right? Import duties? No. Then we'll go and record. What is it? Operating outflow. Is there GST? Yes. So go and record operating outflow, import duties, 4,500. Right? 4,500. Right? Then you have GST. So then plus 450. So you missed the GST for that test?
Yeah.
Why? You thought no GST for import duties? Yeah, government is very smart, yes. They charge taxes, double tax. They charge tax and also on top of that, also tax on tax.
That's why I thought like, if we had tax like
Yeah. Again, another 10% you have to pay GST. Right, good. No, not good. Okay, next one, guys. Gross profit. Yes, do we report in the cash flow? No. Inventory gain, operating, inflow? No, why not? Inventory, yes, non-cash. Right? Then, other expenses we have rent, 27,000. GST, yes, there is GST for that. So go and report in the operating outflow, rent, 27,000, and also don't forget there's GST here, so I'm adding 2,700. Okay. Right. Next one, guys. Wages. Yes. Is there GST? No. So 19,000 operating outflow. Okay. Now I have another adjustment, which I have included my next one, next one. Okay, this one. Now assume, so rent is 27,000, yes? If the question says 7,000 of this one was prepaid in the previous period, now what do you do? Make sense? Yeah, then you don't record. So how much is the rent then? 20,000. Also, so that means you are going to, what is it? Subtract 7,000, right? No, not incurred. It was incurred here, not paid. It was not paid in this period. Incurred in this period. That's the two concepts. That's the difference between the concepts. Expense or revenue, that is incurred or and in this period. Cash flow is basically the affecting cash. What is cash? Money, notes and coins, and cash at bank. Okay. Also, there can be another one. What is it? For in this period, we had paid another 5,000 of prepaid rent for the next period. And what do you do? Yeah, you add that. Yeah, you can do separately or you can do together. Yeah, we'll see when as the question tell us. Right? Does that make sense? That is, you don't have to worry about now. That's for the future. Okay. And also don't forget, don't forget there is GST on that. Okay. Then guys, next item. So we're just done. Insurance expense, 2,500. There's operating outflow, and also there is GST. Right. Next one, guys. Vehicle expenses, 4,600. Is there GST? Vehicle expenses. What is it? Investing. Vehicles. Operating. Yes. Vehicle expenses operating. 4,600. And also 10% of GST, 460. So see, I don't have to do GST separately. But the only thing you need to train your brain to do that. That's it. After that, that's it. Okay. Next one, guys. Technically, that's it for the cash flow. Now it's a matter of adding, right? So we'll start from the GST paid. GST paid, I'm getting 15,860. Yeah, that's GST paid. Actually, it should be in here, yes, whichever it doesn't matter. 15,860. And then it's a matter of adding, guys. My net cash flows from operations is 14,750. Right? And then
we did the accounts payable.
yeah. You have a question?
Why we not attach the GST?
GST? So the GST paid on the 122,000? Yeah. So okay, okay, guys, there is a question. Valid question. Is there GST in 122,000? Payments to accounts payable. Is there GST? Yes. Sorry? Doesn't matter. Why not? Why not? Yeah. Yes, by the time we made the credit purchase, we had already identified that. We are not going to identify GST when we settle it. Same thing for accounts receivable. Then you could have asked me, accounts receivable also? Isn't there GST? Yes, we didn't identify it. Why? Again, the same principle. Why? Because we don't identify GST for accounts receivable and payable when the cash receipts and settlements are there. Why? Because by the time we make the credit sale or purchase, we had already identified it. We are not going to count it again. Yeah, we will recognize it when we calculate the GST. Sorry, hold on. GST payable, but only for the credit transactions. So when we for the cash involvements for those credit transactions, we don't identify GST. Make sense? Yep. So that means when we pay accounts payable or when we receive money from accounts receivable, we don't identify the GST in that because we had already identified by the time of the credit transaction. Okay. Right. Next one. There is only one item for investing. Net cash flows from investing is 50,000, and then financing guys 27,650. So net increase in cash, net decrease in cash portion is 37,100.
Did you get that? No. Wait, do you have to wait for operating inflows and then outflow?
No. Okay, guys, you don't have to do like inflows, outflows like that. You don't have to have titles like that. Yeah, good.
Can I go after him, sir?
Yep. You are done. Then shall we start question 3? Yeah. Yeah. Oh no, before that there is theory for this, yes. I'm sorry. We have theory for this. Right. Also, guys, in case if we don't have time, I think some people are doing the. Okay, he's not here. He's the one who is doing the SAC. Anybody who's doing the SAC this week?
I'll do it next week.
Next week. You guys also next week? Good time? You finish, you done? Yeah, so done writing. Right, cash flows from financing. What is it, guys? Cash flows from financing. How do you define?
Transaction that change financial structure. Cash flows that change.
Yes, the cash flows that result in change in the financial structure. Example.
So I thought it was describe financial activities for that one for the period.
Sorry, I didn't get it.
Those describe financing activities
for this period. Is that so? No.
You describe
Cash flows from financing activity, I think in general. Yeah, still we can do that. So the only thing that I have to check out is capital contributions, yes.
Well, what about the bond? Isn't that going to the financing?
Yeah, it's in there.
Like, for example, if I'm taking out a student loan, like, the repayment comes for that, and I'll start my business, then, or like, in the cash flow statement, does that get recorded?
Mm.
Does it get recorded in the cash flow statement?
Yep.
Money goes towards the student loan.
No, student loan is not for business. That's the personal. Then you can record it as a drawing if you pay from business money.
We're recording the drawing.
Yeah, because you are making a personal expense, personal payment.
So it doesn't go to the cash flow statement.
It goes if you pay from your business bank.
Oh,
If you make a personal expense or personal payment from your business bank account, it's a drawing.
drawing.
Yeah.
But that still is a financing activity, right?
Yes. Okay.
That's all I need to know, whether that's a financing activity or not.
Yeah, but it is going as a not as a loan repayment drawings.
Okay. I didn't work much. I just do a bit of.
I'm asking for clarifying that.
However, if you have taken the loan for a study that is relating to your business, yeah, it will become a business expense. Yeah.
Like, if I want to like take a out of loan for my accounting studies.
Yeah.
And I'm planning to one day expand my parents' account, my dad's accounting firm from a in-home firm to an actual firm. Then, then after that, this is on just.
Yeah.
Become.
Wait, I have a question. If there's like something like the business, like they win like an award
Mhm.
and they earn a cash prize of like $500,
Yeah.
you have to record that in the cash flow statement.
If you are you receiving it in the business bank account?
It's called business price.
Yeah. 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 If it is business related, sorry, revenue,
Wait, what?
other revenue,
Cash flow.
cash flow operating,
What was double entry?
bank debit, price revenue, credit,
Prize revenue.
or gift, whatever it is.
But if you get something like that, can you like make up another title like revenue? Like for example, that one.
Yeah.
Revenue.
Yeah, of course. Even like, don't forget about the businesses, guys. Let's say you get a gift or money. You get money as a gift from your parents or your siblings or or your partner, whoever. Then what happens?
Accounting.
Okay, hold on. Do you have to pay tax for that? No. It's a gift. Okay? In cash. Cash or whatever it is, which we can measure in cash. Right? I'm asking like not business purpose, personally. Right? Personally, you get a gift. Is it taxable?
Isn't it? Well, if it's below 10,000, it's not taxable.
Yeah, regardless. Yeah. Anyway, it will be at the end, it will be added. Would it be taxable? Gift. No. Under certain amount. No. Yeah, if it is a gift, yes, you have to pay tax.
Wait, like purchasing a gift or receiving?
Receiving.
I'm not sure for loan.
No, personal. So my question was for tax. If you get a gift, is it taxable? Yes. Business definitely yes. Yeah. Personal income also you are taxable.
But it's not income.
Yeah. It is treated as an income. Yeah, that 18,200 is affected regardless. It doesn't matter about 18,200. So is it taxable or not? Taxable.
What if you just don't record it?
Oh, scared.
Yeah. If you don't record and you get caught, you get a fine.
Taxable.
Tax evasion, yes. Minimum 1,000.
So for every
Minimum 1,000 and sorry, what's bad about tax evasion?
Sure wonder what's bad about tax evasion.
No,
That's illegal. Yeah.
not pay tax now, invest in your business, make more money and pay it back later.
Yeah, regardless, you are taxable. Yeah,
Wait,
you have to pay the fine.
even if you get like a personal gift, you still have to
Yes,
pay tax.
taxable. Yeah. Okay, imagine. Okay, this one. Imagine you do a job after your graduation. Then your business offers you a vehicle maintained by the company. Okay, do you have to pay tax for that?
Yes.
Yes.
Yeah.
Yeah. So
It's maintained by the.
yeah, maintained by the business. Let's say the cost of the vehicle per month is 10,000. That means it is as if you were receiving another pay 10,000. Still, you have to pay tax for that. That's called fringe benefit tax.
French benefit.
Fringe. FPT. Yes.
Wait, so like exactly this. So it's like tax evasion by giving people.
Is it proportional tax?
Like
Tax evasion?
not reduce the production, but like not giving them income, but like
No. Like you are personally taxable.
Wait, is that a proportional tax?
Yeah. Still, it is proportional. I mean the PAYG proportion. I mean progressive tax.
Yeah, capital gains. Yeah.
changes get the CGT.
Like what's
Okay, guys. Yeah.
I have a question.
What do you call it?
So I have airport consultant. I think where we can claim GST.
Yes.
Well, what's that?
Yeah. So yeah. So he's asking another one, not relating to VC. Still, I'll tell you. So let's say you purchase something, which is more than $300. There's a cap. If it is $300, as I remember, 300 is you purchase something more than $300, and then or maybe a collection of items, and you are going overseas. Maybe you are not going to bring it back. Okay, make sure you don't bring it back here. Okay, and if you are if you have paid tax for that GST, then you can get the money back in the airport. Yeah, even we have done. No, here also we can. Yeah. Yeah.
For the shop.
Yeah.
For the shop.
Yeah, fair.
Yeah, there is one corner. Yes.
Yeah.
Yeah. But the yeah.
You bring it back.
Yeah, you get fine. If you bring it back, yeah, you get fine. Okay. Yeah, but sometimes they check it. Then you have to pay a big fine. Okay, however, guys. Right, next question. Part D. Giving 2 examples other than loan repayment and the drawings. How the business can have a net profit but have its bank balance fall. Okay, this one, guys, what did we say? The difference between cash and profit. Yes, are they the same concept or different? Why? How many reasons are there? I gave you how many reasons? 3 reasons. What are those?
Some transactions affect cash but not profit. Some transactions affect profit but not cash, and some transactions affect both.
Yes, both but different amounts. Okay, so what are the transactions that affect cash but not profit? Loan repayment, drawings, sorry, non-current asset purchase, term deposit. Okay, which is also a non-current asset or maybe a current asset. This is the settlement, refund, payments to accounts payable. No, cost of sales. Later. Next one, there are some transactions that affect profit but not cash, like gain, loss, write down. No. Discount. No. Depreciation. Yes. This loss or gain on loss or profit or loss on disposable of assets. Yeah, they are not affecting cash. Yes. Yeah, discount we adjust it. We adjust it.
Why not cost of sales?
You can't say it.
Yeah, because there is a corresponding for that.
You can't say it in your answer. You can't say discount.
No, you can't. No, not discount. Okay, guys, because we adjust. discount. Right, that's how we calculate receipts from accounts receivable or payment to accounts payable. Last one is, there are two items that are affecting both. What is it? But by no different amounts. Credit sales and credit sales and receipts from accounts receivable, right? Are they different, guys? Yeah, imagine whatever we make, say whatever we sell on credit, right? Have been able to collect in that period itself. Still, would it be the same?
No.
Why not?
Discount expensive.
Okay, let's say there was no discount expense.
Yeah, it will be. Wait.
Still, would it be the same?
Wait, hold on. GST?
Yes, GST. Still, it won't be the same. So let's say we sold 10,000 worth of goods on credit,
Yeah.
and we have been able to collect it in this period itself. So still, receipts from accounts receivable will be different. Why? Because of GST.
Plus GST.
Yes,
Yeah,
that's GST. Because we are claiming as a revenue only 10,000 in the income statement.
Yeah.
But when we receive money, cash flow, 11,000 from the accounts receivable. Make sense?
Yeah.
You are receiving this, but it is not a revenue in the income statement.
Wait, so here in receipts from accounts receivable, we include the GST.
Yes, but not in the credit sales. Credit sales is just 10,000.
But then why won't we be including in the payments to accounts payable?
Same thing for payments to accounts payable also.
And you say you don't include the GST.
It's
Yeah,
already been included.
it's included. Payments to accounts payable we include. This is also we include, but we don't recognize.
Hey, remember the double entry?
We don't recognize. Your point is, what is it? Do we recognize the GST when we receive money from accounts receivable? GST received? No. That's your point.
Yeah, yeah.
That's your question.
I was confused. Yeah, yeah.
Yes, I know. I can see you're confused.
Yeah.
So did I confuse you more?
No.
All right. Okay, then what is it, guys? So cash receipts from accounts receivable, and corresponding to that in the income statement is credit sales. So then they are different. So then, this thing will happen partly. Also, guys, the other one is cost of sales in the income statement. We compare with what is it? What are the corresponding items for that?
That's what it was.
Payments to accounts payable and or purchase of inventory in cash. Why did they say and or? Because some questions we will come across inventory purchase in cash, like this question, but not in some questions. So if you have it, you need to add both, which both payments to accounts payable and inventory purchase in cash. That addition, that sum should be compared with cost of sales. Okay? Right. Now, this part D is a compulsory question, guys, in VC. Every time you will have it. This is the hard part. What is it? Now see, giving two examples other than, they are giving you restrictions, limitations. So when they give you limitations means in VCE, right, they are saying, see, two, except these two. That means you have only two definite. You have to figure it out.
Okay.
That's the hard thing, which was not the case in past. Right? In the past, it was not that hard. It was easy. There were so many. But now you have only two. You must find those two somehow or the other. Make sense?
Yeah.
All right. Now, can you tell me the answer for part D? Look at the question. If you want, I'll show you the question answer. Our cash flow statement.
There's more than one. There's more than three.
More than three?
More than three for this one.
More than two? Yes. It's only have more than two, yes. Okay, you can't say GST paid. You have to compare with GST received. Okay, guys, you can't say GST paid. Why? Because there is opposite answer. But in this case, yes. Why? We have paid more GST, yes. That's correct. Yeah. Sorry? Yeah, we'll soon. Probably in 10 minutes. Ah, you are going early today, yes? Then you don't need the stamp time.
Well, it's only like half an hour early, it's not that much. So I still need that time.
Payments transferable.
Yes,
Payments to accounts payable
payments to accounts payable
and inventory.
and inventory purchase, which is how much? 200 and
190.
200 and how much? 11,460, yes?
Wait,
Inventory purchase is 70, I'm sorry, I'm looking at the wrong, 7,000 and 192,000. 192,000 against 180, yes?
beat them, please.
180,000 is the cost of sales, yes, that's correct. So that is one. What else?
Inventory gain.
Inventory gain. You sure? Yeah, yes, inventory gain is another one. What else?
I'm serious. It was just a delivery truck. Yeah.
Purchase of delivery truck, yes, that we have to compare guys with the loan as well. So loan we received 45,000, but the purchase was how much? 50,000. No, that 5,000 DST we compare separate. And so this 50,000, yeah, 50,000 and 45,000. Yes, that's also correct. Because we received only 45,000 and we purchased something worth of 50,000. I think you said more than two. Yeah. This is my answer for part D.
Can you say like accounts receivable and not being received yet?
Sorry, accounts?
We haven't received accounts receivable even though we've made a revenue.
Trade sale. That you have to again compare.
But
How much
you
is
can-
the
you
trade
can-
sales? 144,000?
Yeah.
Yeah. How much did we receive?
96,000 cash.
But it says.
No, 141,000, yes, as I remember. Yeah, yeah, that's also correct.
Yeah.
Trade sales is 144,000, but we received less.
142.
142 or 141?
111, I read.
Yeah, if you want, guys, I'll upload the solution. Don't worry. Right, now we have to discuss, right? Yeah, we have discussed the last two questions. We don't have time to do it, but let's discuss it. Question 3. What do you think about it? Are you going to get this one in the exam? In the exam?
We get inventory turnover. No, we get.
Yeah, no, we would get this.
We get gross profit margin.
We get GPM and
No,
NPM.
I think you are getting
No,
margin.
They
No,
can
no.
ask this.
we get both.
No, we
They
get.
can ask this.
No, I think you are getting it.
No, we're
Because
getting,
I saw somewhere in
we're
the
getting NPM
exams.
and GPM in the next time.
Yeah, but we might. There's like a 50% chance we might get accounts receivable.
Oh.
No, she said there wouldn't be. It's just NPM, GPM, and I think ITO.
Yeah,
Yeah,
that's
just-
what ITO.
you are getting? No.
Maybe.
Yeah, didn't we do inventory turnover last session?
Yeah, last.
Okay, so what if you?
Tell me your thoughts.
Then they put this credit some. Increase or decrease the country.
Yeah. Explain the importance of creditors when assessing the accounts receivable turnover. Is it important?
Yes.
Why?
Increase or decrease the country based on the incentive provided customers.
Based on the
Based on this.
based on the incentives, yes.
If accounts receivable turnover is more than credit terms, it might affect the amount of time it takes to.
Yes.
Okay.
Yeah. Yeah. So basically, guys, when assessing the accounts receivable turnover, so when we assess it, meaning we are evaluating it. What do you mean by evaluate or assess? If the accounts receivable turnover is what? Good or bad? How do we know it is good or bad? We compare this one with benchmarks. Yes, benchmarks. Benchmarks. Marks on the bench. That's
Standards.
standards. Acceptable standards, yes. Basically, high top standards are benchmarks. So then, guys, we can compare it against the credit terms, and also we can improve it, as he said, by offering discount terms, but I mean, impressive discount terms, yes, will improve the accounts receivable term. Right. Then part B, one other benchmark. So how many more do we have? Three more. What are those? Sorry?
Industry average.
Industry average accounts receivable of the industry,
Budgeted
budgeted,
accounts receivable term.
budgeted and past accounts receivable term. Last one. Relationship between the trend in the inventory turnover and GPM, gross profit margin. What is gross profit margin, guys?
It's revenues minus sales or
Revenues minus cost of goods sold is the gross profit, yes. Gross profit margin,
on and
what is gross profit?
gross profit margin, gross profit net sales.
Get gross profit on excess as well. Okay. Right, then, do you remember net profit margin? Whenever you say margin means what? I have told you. Margin means you compare with the,
Sales.
no.
Net profit.
Yeah, you compare the net profit or gross profit with
Sales.
sales.
How much like to expense?
Yes, if you compare the gross profit with cost, what do you call it? I have forgot. Markup. Right? See, if you compare the net gross profit with the net sales, we call margin. If you compare gross profit with the COGS or cost of sales, we call markup. Okay. So wherever you come across margin means we are comparing it with what?
Sales.
Sales, net sales. That's it. Then guys, I told you in net profit margin, what is it? Greater the better. At any time I can say greater the better. But gross profit margin, can we say that? Greater the better?
No,
Why not?
volume.
Volume,
Depends on the gross profit amount.
gross profit amount, okay. What else?
The margin is too high. And the
Yeah,
sales
okay.
number,
How can we improve the gross profit margin, guys?
higher markup.
Higher markup? But higher markup is there's another debate. How can we improve? Yeah, no. Higher markup means you can get the higher markup, how? In two ways.
Increase selling price.
Increase selling price and
Increase cheaper supply.
yeah, decrease your COGS. Okay, right? Or cost of sales. Then guys, gross profit margin, if you increase your selling price and you improve your gross profit margin, there's a problem. What's the problem?
Sales volume.
Yes, the competition. So basically, it will be more expensive for the customers. Customers wouldn't like it,
Tracks.
and then we might drop the sales. We drop the sales means what will happen? We are making less sales, and as a result, some fixed expenses wouldn't be covered. Okay, maybe rent, wages, we can't cover them. So that means we might go into a loss. Yes, so profitability will drop. So that's the problem. So the only situation that we can say gross profit margin is greater the better is if the gross profit amount remains the same or higher.
So yeah, correct.
Yeah.
Yes, that means we are making more gross profit amount. Gross profit amount, okay? Not margin. So we have done them. In which tube? Tube number, I think 14, 13 or 14? 13, yes? I can't remember, 13 or 14 maybe. Or maybe 14. Yeah, wherever we have done. 13 or 14, whichever we have done. So then read them guys, okay? Gross profit margin. So this is a VC question. Gross profit margin. What I explained is a VC question. Finally, this one. You answered it.
James Corden is an actor. So, next time, would you be kind enough to use someone like Michael Jackson?
Michael Jackson. Okay. Michael Jackson.
Yeah. Or maybe,
Yeah, he goes like LeBron.
or maybe if LeBron, Jafar Jackson, use that name.
Okay, guys. Part A. Now, what is happening here? This is something happened during COVID. I think still the same situation is here, but not the second-hand market is not that much. Good.
Because the new car company.
Yes, new cars, yeah, too expensive and also getting late. Yeah, and also getting delayed. Yes. Okay, guys. Now, part A. Effect increase in the markup may have on the gross profit margin and net profit margin. So what are the effects, guys? Gross profit margin will yes increase, and then net profit margin will also can increase. But however, that everything depends with the demand. Yeah, if should the demand continues with the higher selling price, what will happen? Yes, then it will be better off. But if the competition, because of the competition, and if the customers find it more expensive, then the demand is going to drop, meaning our both margins will drop. Sorry, gross profit margin will increase. That's regardless, it will happen as long as they make at least one sale. Yes, even as long as they sold one car in the period, that's fine. But the problem is, yeah, gross profit amount, net profit margin will be definitely affected badly, right? Why? Because as I said, fixed expenses cannot be covered with the lower gross profit amount, right? What is gross profit margin, guys? For those who have forgotten the concept, what is gross profit margin?
Every dollar.
Every dollar of
Every dollar, how much is
Every dollar per hour and how much is.
yes. Correct. How much of gross profit is made for every dollar of net sales? Yeah. Gross profit is earned or retained for every dollar of net sales is, what is it? Gross profit margin. Yes. So then, as long as you made at least one sale, fine. Yep. Gross profit margin is very high, but your gross profit amount is low. So as a result, net profit margin will be inversely or negatively affected, right? Then part B, guys. Identify and explain one other piece of non-financial information.
So like number of customers in like the store.
Huh?
To address like you can see the number of like how much demand there is.
Okay.
Greater demand, there'll be greater like customers.
Yeah, the level of demand. Yes, that's correct. What else? What else, guys? Number of repeated sales. Okay. What else? I would say the level of competition. Yeah, level of competition is affecting, yes, making the decision, because you can increase the markup. Yeah, proximity, and then we can increase the markup as long as there is not enough competition. If there was competition, then it will be affected. Finally, guys, analyze. This one is little bit hard. Analyze the financial and ethical implication of this potential strategy. Right, so strategy of increasing the selling price. What will happen? What are the positives? Yeah, increase profitability or profit. Yep. Yep.
Increasing sales with a great reducing demand. So which is the overall sales.
Reducing demand. Okay, yeah. So if you unnecessarily increase the price, what will happen is you will your stocks will be, I mean, inventory will be held in the business. Holding expenses will be higher. Yeah. Then what are the negatives? I mean, sorry, ethical issues. Sorry, ethical issues.
Customers might feel like they might feel like reduces reports because like exploiting them.
Yes.
Yeah.
Customer exploitation. If the customers find it as like exploiting the customers, yes, then sales, no, not sales, reputation can be affected, right? So then, yeah, future sales, yep. And then sorry,
No,
ethical advantage, positive. For the government, no, that's again financial.
Like wants to donate.
Yeah. So basically, yeah, ethically, yes, it can be. However, we can say like the business is looking for an opportunity. Yes, opportunity for them to develop, right? And then, on the other hand, it is sometimes for the long-term customers, yes, it will be unfair, right? So then reputation can be affected. Yeah, don't worry, guys. I'll give you the answers for them. That's it for this one. So you can take a break, 5 minutes. We'll start the second and last one. Yes. Yeah, and also you asked me to do 3 years. Somebody did asked to do 3 years. Actually, like both the sets are, what I gave you is like longer than your school ones. Yeah. So then technically it's like we have done almost 3. Yes.
It's ready. Hey bro, are you gonna stay back?
Today.
Ah, yes. Yeah, we can do the third one then. If you stay back.
No, I'm like wasting my power box every other.
Yeah, we are meant to do the cash flow statement and the income statement for the quarter ended 30th June 26. Okay, guys, where would we start it? Yeah, additional information, right? Then how long is the period? 3 months. And this one we have to prepare the cash flow and income statement. Let's do it together. Okay, we'll do it together. Okay. Total sales is 500,000. Credit sales is 40%. So meaning 60% is cash.
It's the new receipt. You're losing. Yes. Yeah. So,
With what banks? Many of them.
even on finances.
Also, you have GST received on top of this. Sales return is 10%. Cost of sales is 50% of net sales, right? Then we have inventory purchases, guys. 200,000 and 60% on credit, meaning 40% on cash, yes. Right. So
We need to maintain.
inventory purchased 120,000. And then we have GST paid on this. Which is 12,000.
It's 8,000 kilo.
Sir,
8,000.
inventory purchase, how much?
8,000.
60% on credit. Oh, sorry, 80,000, my bad. 80,000, yes. So you can put it within brackets. Also, guys, we can record this in the income statement. So sales 500,000. And then we had sales returns, which is 10% on total sales, yes. 50,000. $450,000 net sales.
Okay, heading out to.
Okay. Less cost of goods sold.
So can you send me the two?
Dude, yeah.
And to make sure that you send it, I'll send you an email.
Yep. Cost of goods sold. Right. They had given us guys cost of sales, 50% of net sales. How much? 225 years. Right. Inventory loss is 2%.
Yeah. And plus.
2% of total sales, which is 10,000.
Have a good day.
YouTube.
That's, please send me the resolution.
Yeah. 10,000. Okay, guys, next one. Did you do this one? The inventory write down thing? Yeah. Okay. Okay, guys. So how much is the NRV here? Yes, NRV. So we have to calculate separately, yes? Yeah, for the first batch, which is at 55, NRV for say for $55, right? So how much is it NRV, guys? Yeah, NRV regardless will be the same, yes? Sorry, NRV is going to be the same, which is estimated selling price is 50 and selling expenses will be 5, right? Yeah.
Residual value. So how do we do profit or loss in this bill?
For the disposal, yeah, you don't have to worry about the profit or loss on the disposal. Why? Why is that? That's a good question. Why don't you have to worry about the profit and loss or the disposal?
We don't have, it's not an issue.
No, no. Anybody else can say that? Why we don't have to worry about the profit or loss on disposal? Actually, can you calculate the profit or loss on disposal here? No. We don't know depreciation, we don't know residual value or carrying value, nothing. Carrying value probably we know, yes? No.
We don't know.
Yeah, we don't know anything. So why shouldn't you be very worried about the thing? Because this is unit 3.
There's no non-current assets in it.
Yes, but non-current assets can be there. Non-current assets can be there. Yes. Even you have learned it in unit 2. Yeah, this is about purchase. Yeah. Sorry, we were talking about the NRV, guys, which is 45, yes? Right. Now, how do we calculate the inventory write down? So inventory write down, we have to calculate for them separately. Inventory write down for the 55 ounce, right? Now, the stories, they have damage. I mean, they have the problem is only for 80 units, but there are 100 units. Altogether, there are 100, yes, in our hand. But the problem is only 80 units. Then which one are we going to take? First in, first out, FIFO. We are going to pick the FIFO, yes. Then we are going to say this 55 ones, 55 becomes 45, meaning, yeah, 55 becomes 45, meaning $10 times by how many units? 40, which is 400. And then the 60 ones, sorry, yeah, 60 ones, what happens? The other one is for 60. That happens 60 take away 45, which is 15, yes? 15 times how many? Again 40, which is 600. So then total inventory write down is how much? How much is total inventory write down? 1000. Okay. Everybody got it?
Yeah.
Good. Yeah, so you said this, yes. Yeah, inventory write down.
There's one more space in cash flow.
Not enough space? 11,000, yes. Okay, next one, guys. Yeah, for now, if you don't have enough space, you can go to the part B section. Right, we'll find space for that somewhere else. Okay, next one, guys. Yeah, this is done. Next one, drawings, 15,000, 10% inventory and 90% cash. Right, so where do we record it, guys? Yeah, sorry? Cash flow statement, how much? 13,500, yep. So then, yeah, I'll do probably somewhere. Somewhere here. Cash flows from financing activities. $13,500. Right, next one. Wages, expense incurred and paid, 10,000 per month. Right, wages, expense and incurred, same thing. So
Also,
30,000 for 3 months. And at the same time, I'll record interest as well. Interest is 600 per quarter.
Have you already done the GCC?
GST received?
You already finished that?
Yes, 30,000, but there is another one. Yeah, good. Right. The next one, guys, we have to report it in the income statement. We'll do it both together, wages and interest. Probably we'll do somewhere here. Interest expense is 600. Wages 30,000. Right. Next one is the other problem. Yep. I'm going to drop the inventory write down. Everyone is okay with that. This one, guys, yeah, business has been able to collect money in the current period from accounts receivable remaining from the previous period, except one account receivable owing 1100 was written off in this period as bad debts. So then what do we do, guys? Bad debt expense 11 is 100. 1,000. Bad debt expense. No. No, bad debt expense is not 1,000. Okay. What do you do? What's the double entry for this 1100, Arvind?
I'm doing it. I've seen.
He's like Sonic, bro.
No, the thing.
Oh yeah, it's Sonic.
It's not Mario.
Yes, Arvind? Forgot?
It's Sonic. It's mobile.
Son, do you remember double entry for this 1100?
Oh, it's the okay.
Forgot? You remember, Aston?
Debit. Debit account no credit account receivable. Debit GST clearing. Debit allowance without the dog.
Yeah.
But there is no allowance without the dog. Is there allowance without the dog?
No.
So we should.
So then what do you do?
At the expense.
No. You have to open up a allowance for dog food. Yeah. Allowance for dog food, you have to start up. Yeah. Yeah.
To start.
Yeah.
To start one discussion.
Yeah.
Well, yes, yeah, let it just spend it. Isn't he way around it? I think it's go straight to bad debt expense.
Yeah. Yeah. Some people asking, can we do it straight away in the bad debt expense? No, we haven't done in that in your study design, guys. If you have any account receivable written off, have you ever done it in the bad debts expense? No. We don't do in that one. In your study design, what we have is to debit in the allowance for doubtful debt. How did you do, guys? How did you do? You did in the bad debts? I mean that 1100? No, what did you do? Nothing. Ledger debited. Which ledger was debited? Yeah, correct. Okay, so then shall I draw an allowance for doubtful debt account somewhere? Yeah, I can do it here as well.
Come back. So do we just when you that? You do.
Yeah, allowance for the output date will be debited, guys. How much? 1,000. Saying accounts receivable. Right. We don't know a date. It says during the period. Okay. Then, except that we are receiving the remainder. Yes. How much are we receiving? Yeah, we have 7,050 accounts receivable. How much are we receiving? This one take away 1,100. Yes. This one take away 1,100 is how much? 5,950. 5,950 we are receiving from accounts receivable from the previous period. Okay. So now I'm going to calculate the receipts from accounts receivable.
Okay. Okay. Say it's just.
Receipts from accounts receivable. Right. So firstly, guys, I'm getting from previous period, from previous period or previous balance. I'm getting how much? 5,950. Okay. Maybe I'll write somewhere here. Right. Then, am I going to receive something else? Yes. What am I going to receive there? So remember, from the credit sales. So to credit sales is how much, guys? 40%, meaning 200,000. Yeah. From 200,000, did we have sales returns? Yes. Which is 50,000. So then becomes 150. Yes. Yep. You want me to do it here? So we have credit sales, 200,000. From that, we subtract sales returns, 50,000, 150,000. Right? Is this how much we are going to receive? No. Then discount expense. Right? No. No. Yes, you had to add GST, guys. Plus GST. Sorry? You did that. 15,000. You had to add GST. So you have 165,000. This is the total receivable from accounts receivable. However, guys, what is the story? 60% of the next line. 60% of the credit sales made in the previous period was settled by accounts receivable, and they received in the period. Sorry, not the previous period. 60% of credit sales made in the period was settled by accounts receivable, and they received a discount of 5%. So that means, guys, what is the story? We have to get 60% of this. Yes, 60% of this, which is 99,000. Yep. So you have to get 60% of this.
I don't think we can make sales. Yeah.
Yep, 99, yes. So I'll times the 60% here, times by 60%, giving me 99,000. Right? Then what's the next part? They are getting 5% discount. So how much is a 5% discount on this? 4,950. Yeah. Discount expense. 4,950, yes. Then take away this. How much is the difference? 94,050. Huh? 94,000 is 50. What do you call that one? I'll write in red probably. 94,050 is the cash received. Yeah, from this period's accounts receivable, less from this period's paid sales or whatever. 94,050. So what's the total receipts, guys? 100,000. So addition of these two, 100,000. Exactly, I'm getting 100,000. Any problems? Anybody who got it correctly? Nobody? Too easy, yeah? JD? You didn't minus sales tax? Ah, that's why you are going to break your hand, yes? Really? Okay. All right. Okay. Then, guys, yeah, how much is the cash received from accounts receivable? 100,000. Anybody who didn't get this? However, if you want, we can calculate this one from the ledger account as well. You want me to do the ledger account? No. Okay. Otherwise, if you want, I can show the same thing. But that's fine, guys. We are going to do it next lesson. Budgeting. That's what you call accounts reconstruction. The last time we are going to come across double entries.
What do you mean last time?
That's it. That's it, then double entries. Okay, guys, then 100,000 is cash received. All right, from this information we can do few things here, guys. I'm going to do firstly, okay, income statement here. So I'm going to report discount expense. How much? 4,950. Right? 4,950. And then I'm having, so I'm not going to report in there, but I can report what is it? Receipts from accounts receivable. $100,000. Okay. Right. Next one, guys. Yeah, loan repayments are made quarterly. Loan repayments made quarterly. But I haven't given you the loan repayment. How do you figure it out?
So current assets.
Current assets. Loan repayment is the current asset. Who told you?
You look at the current assets.
Oh, current assets. Look at the current asset. Where is loan repayment in the current
Oh,
asset?
current liability.
Okay. I think, yeah. Too easy, yes. Too easy. Yeah, that's fine. All right, then, guys. Yeah, you have current liabilities. Look at this, 6,000. So current liabilities, what do we report? Annual amount is what we report. Yep, 6,000. Then how much is quarterly? Yeah, you divide by 4, 1,500. So quarterly repayment is, guys, how much? 1,500. So in the financing, loan repayment, yeah, these things should be in brackets. Okay.
That's the. Franklin is the one blind about it.
Next one, guys. Non-current assets are purchased in cash and all of such cash is funded by loans. Right? All of them are funded by loans, yes? So, does that include GST as well? Yes? Yeah. Right, then we don't know how much it is. We'll see. Next one. A delivery van with the cost of 10,000 was sold during the period in cash for 2,000 plus GST. So what do we do with that? Yeah, what do we do with that? 2,000 plus GST? Sorry? Sale of van, yes, which is in the investing, yes. And also there is GST, guys. So what do we do? So we need to add the GST here. So we have to add another, how much? No, 200, yes. So it's going to be 30,200. 30,200. Okay. Right. Also, guys, we had to report that in the investing activities. Yes. Investing out report here. Cash flows from investing.
I don't know what's. Huh? Allah. What do you know about? Allah. Wait, so you went. Went for long.
Sale of delivery van 2,000. Positive. Then next one. Delivery vans at the end of the period was 47,400. So what does that mean? A delivery van with the cost of 10,000 was sold during the period. So how much did we start with? 37,400. That means take away 10,000. Yeah. So then meaning 27,400. But they are saying at the end of the period, 47,400. What has happened to the difference? Purchase. Yes, Christian, how much is the purchase?
20,000.
20,000. Okay. So then what does that mean, guys? We have purchased 20,000. Where do we report that? Loan 20,000. Loan received 20,000. No. No. Yeah, investing outflow. Sorry, not investing. 20,000 is talking about the loan. 22,000. Why? GST. Too easy. Too easy, boys.
Tuesday.
Okay, so don't forget GST, guys. You have to add GST as well. So everything you are receiving, 22,000. Okay?
This is so much tax. Like, how the government take anything on them?
Yeah, that's the thing.
And AI. Oh, what?
And from this budget, did you know? There are some economic students, economic students, yes? Yeah.
So I saw the new budget.
Yeah. See they have taken out the investment property losses from the personal, yes, negative gearing. So that means investment property loss, hereafter we can't subtract, I mean, for the new ones, for the new purchases. That's what we kept doing, but now, I mean, for the new purchases, you can't do it. Existing, you can.
For new purchases or new houses. Like you do.
Yeah, new houses you can do, correct. Not for the existing properties that we purchase.
No, like newly built.
Yeah, I know. The existing purchase of properties, no. So new built, yes.
No, I'm working on home loan guarantee.
5%.
Hmm.
5%.
Okay, guys. Now, what do we report here? We have receipt of loan.
Upwards pressure.
How much is the loan received? 20,000 plus GST. 22. Positive. And then, yes, and then, what is it?
Wait.
Come again?
GST paid.
Yeah, GST paid as well. We have GST paid. Before that, we'll record it here, guys. Purchase of.
Let's write the bank name, man.
Did you, if they have given, is better to write. Did you even? Is there a bank name given? No.
Green is the same.
No.
How do you know?
Yeah, then yeah, don't worry. Right? So we don't know exactly whatever it is. Right, then 20,000. But this is negative.
Yeah, the loan repayment.
Sorry, loan repayment? Yeah, that one we know, yeah. Yeah, now we can do the GST, guys. How much is GST here? 2,000, yes. GST paid. Okay. Done. Next one. Owner asked the accountant to create and maintain an allowance for doubtful debt, 2% on net credit sales. This is the interesting thing. What is it? What is the difference that we are coming across here? Or differences that we used to do before? Sorry?
You start from fresh.
Start from fresh, yes. We didn't have an opening balance, sorry. Yeah, we don't have an opening balance, 0. No opening balance. Then, but still they are saying to open up an allowance for doubtful debt and maintain it at 2%. Okay, create it and maintain. Okay, how much is our net credit sales, guys? Net credit sales. Yes, our credit sales is how much? Yep, 200,000, yes. And our sales returns, 50,000, which is 150,000 is a net credit sales. Yep. And then 2% of this, which is 3,000.
Yeah.
Sorry?
But that's more you.
Yeah, that's not the way you record it.
No, we don't look at that.
Then what do we do? 3,000 with 3,000. That's ending balance. Wonderful. If you understood it, fantastic. This is 3,000, guys, balance. Now, yeah. Why do you say it's a 3,000? Sorry, you are going to add. What is it?
No, you need to add like.
No, the second video turned around.
Yes.
Yeah, bad, yeah.
Yes. Why did you think that this is going to be the balance? Why couldn't you now? Because remember how we started doing the allowance for doubtful debt? What did we do for the first one? We debited the bad debts, credited the doubtful debt. But we didn't do this one here. Why? Yeah. Why didn't we do that here? Do that. Remember the first entry for creating a doubtful debt? Do you remember the first entry? What's the first entry? The brand new entry. Bad debt debit allowance for doubtful debt credit. But we didn't do this one here. Why?
No, that's that.
Yeah. So no, yeah, that's the thing. That's why we should be doing it, yes. But we didn't do it then in this one. That's what I'm asking. Why didn't you do it? Because guys, this is the thing. This is where you need to understand the concept as well. What do you mean by this 3,000? this 3,000 means we are telling the users of the reports, look, we have made net cash sales of 150,000 in this period. We are not sure to collect 3,000 from this debt.
It won't be that.
So that's that which is going to be collected technically next period. So then it's going to go to the next period. Make sense? That 1,000 is not relating to this. Why? Something that happened in the previous period. This one was arising. That 1,000 was arising from the previous period, right? That's not relating to this one. Otherwise, simply we could have credited these 3,000 and debited the bad debts. But in this case, guys, what is it? It's the balance. Good. If you understood it, great. So then it's going to be 4,000, 4,000, and then we are transferring 4,000 to the bad debts. Now somebody told me that bad debt was 10,000. That's why I said wrong. Sorry?
No.
Yeah. Somebody said Arvind said bad debt was 1,000. No. It is actually 4,000.
All right. I didn't say it was you.
Okay? Bad debt is 4,000. Yes. So then we can write here. No, not outflow. It's in the income statement.
Slow down on the protein. Yeah. Slow down on the protein now.
And I'm not done.
Bad debts 4,000.
Something says.
And then, yeah, technically that's it for nothing for the cash flow statement. Then utilities expenses, 45,000. Yeah, what do you do with the 45,000, guys?
It's 2,500.
45,000, what do you do? Yep, 45,000. Yeah, let's say for the expenses, utilities
I mean, it doesn't mean ask if you come. Which they kept.
expenses, 45,000. And then in the cash outflow, utilities,
What's it?
and don't forget GST for this one, 4,500.
Make sure it's all done.
And the next one, guys,
Just make sure.
delivery in. Where do we report this delivery in? COGS, yes. COGS delivery in.
Something like topics right now. I think it's practically.
Such a bad debt.
Where were you? See?
Living out.
Yeah, then no, we have to report it here. Delivery in. Yeah, if you want, we can do it together for 50. Sorry, not 350. I mean, not together in the means like one by one. Right, the next one is 250. I mean, GST, 250 on this. Yep. Next one, guys, delivery out, 4,000. 4,000. So then GST for this one, how much? 400. Who said there is not enough space for this?
No.
As enough, yes?
Oh, there's not. There is.
No?
It's it's less by 3 lines.
Okay. Right. Delivery out 4,000. Then GST 400. That's it for the GST, guys. And then we are going to report delivery out other expense.
Bank balance ending and stuff.
Yep.
And
Yep. 4,000. Then, guys, what else? They are saying GST is to be settled. GST, how much? 1,200. So GST settlement, 1,200. Settlement, 1,200, yes. Again, 10% GST on this? No.
Why did GST on GST?
Okay. Right, then that's it, guys. Then it's a matter of adding and subtracting.
Rockwind pensions.
Yeah, respect the guy.
French trade plays for.
One thing.
That's the one.
One thing before you speak anything. One thing before you speak.
Speak look chest.
I really don't know. I think the way it's like. You know that one.
15,150 is GST paid. And also, guys, what is it? We have net cash flows from operations, right? And then you have net cash flows from investing,
18,000. One, two, three,
negative. And then next one is net cash flows from financing, 7,000 positive. Then guys, outflows. Did you add it?
Yeah. And you broke it? Yeah. Okay, good. Yeah, broke it. So the drop down. So why don't you come to the air?
Camper.
Is this amount correct? 178,450. Yep.
Yeah.
Then guys, we have the net cash from operations. 5, 7, 1, 251,750. Yeah, that's positive. Then we have to get the net cash flows from, sorry, net increases in cash position, which is,
Oh, yeah, net cash from financing.
Yeah.
7,000.
Yeah.
Mm.
226,750. Yeah. Then for this one, guys, we add in the opening bank balance, which is 7,500.
Wait, I got a different total.
How much?
24075.
240. As at April 1st, yes.
Yeah, I think net increase should be.
Keep this as yours.
Yeah.
How much?
24075. I think you might have added the, might have subtracted the
Yes. 24. How much is it? 24? 240. This one? All right. Then, guys, we have our closing bank balance.
Um,
247, no, 8250. Yep.
the one thing you don't have to crazy like you know, I can do from small dog. You can ever get one dog for crazy.
5 years.
I'm like.
That's one thing. This one thing, make it. Next thing, you know, working now. Yeah, look for the Australian machines.
And then when you like try them and you went to work. And like you have you like work.
But they stick you with one.
Imagine burn this and be in this. And what happens if someone like puts like pressure on birds? No, actually like the. Yeah, like they're into like one like when I speak to oh like,
But that's something. It's just the outside of the world.
what if it is
Yeah, man, that's cool.
what would you like to say or birds do for just take off with the red cuts? Or they have
So hey, imagine for the so the
skinny kind of just skinny.
forget it. Yeah. Yeah, come on, check the whole thing. That means in the meeting.
Correct. Net profit is this amount. All right, guys, that's it. Then for homework, what do you want to do for homework? Huh?
Nothing.
Oh, no.
Question one.
Question number.
Make sure that you actually think it's the amount of
Or that because of this.
Yeah, you can do question number 1.
Wait, that's it now.
Question 1.
What? I'll ask them, yeah.
Homework.
What I know too. What I do.
All right, guys. Then thank you. I'll see you same time next week.
What do you think?